Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to spend a minute here, especially for those of you that may be using the standard squeeze. If you're just using the version of this indicator that comes built in with Thinkorswim, it's been upgraded, right? The Squeeze Pro has been out for a while, and I really do think we have some great examples to talk about the kind of nuanced differences of these signals. And of course, it's always easiest to do when we began the analysis last week. You guys will remember that I was telling you that precious metals were really in a very precarious spot, a spot where I thought the pullback was probably the easier move to be had. And some of the signals that really clued me into this start with the Squeeze Pro. And the idea that when you move into this high compression phase of the squeeze, that the move has just become too tight, right? Like, my opinion of this way of thinking is that trend-based squeezes will come after a trending move. They will then spend the time to consolidate, to form into the standard squeeze, and then if they are going to be a trend continuation signal, they do not move into the high compression part of this. Right? When they move into high compression, again, this is just kind of my opinion of what I've seen unfold so often and trying to put logic around it. But when you move into the high compression phase, remember that's the Bollinger Bands getting very tight inside the Keltner channels. And to me, it just seems to precede more of topping action as opposed to trend continuation kind of movement, which you could argue, above the 50, above the 100, above the 2, you could argue, trend continuation if you were just following the standard basic squeeze. But I really think that those signals offer a lot of great information. And the thing that I would look at this now is to say, when you get a break like this, look to the correction that preceded the advance, right? Essentially, the selling leg of swing high down into swing low helps us start to get a personality for this name. And really, I believe this is about where you can leave this chart, which is to say, if that move is to symmetrically repeat itself, it's going to take you right back down into the 200-day simple period moving average. That'll be a quick dip below 20, and then we'll see, if momentum decides to wane below those levels. But again, that's really good stuff from the Squeeze versus the Squeeze Pro. And then the other part of this, got to give credit to my good buddy David Starr and the work that he does with the Voodoo line study set. Again, all of this in last week's review, if you'd like to go back and check that video on these pages as well. But, to be fair, you did flush a bit below this fire line, which is the spot that I'd been pointing to as having the potential for showing a reversal. But that's part of the analysis, I believe, that you do have to allow for zones in certain situations. So it kind of tests, push that rubber band a little bit further. But now seeing this reaction, you can see why I'm trying to give this to you in these videos, because I believe they're the most important part of the current market. So these signals will be important to carry into Monday. If we see continued strength from the dollar, look for stocks to continue to sell off. We'll take all that a day at a time and see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.